We're focusing on Europe's mounting debt crisis, with Greece cut to junk by S&P. It's only a matter of time before contagion spreads and other sovereigns follow. Well, is that right? Let's find out with the chief economist. David Owen joins us now from Jefferies International. David, very good morning to you. Thanks for joining us today. At this point, is there anything more that the Greek Prime Minister and Greek Finance Minister can actually do, or really has it been taken out of their hands?
It's completely out of their hands. I mean, what we all want to see now is actually those monies go across.
Yeah.
It was never likely the whole thing was going to be signed, sealed, delivered on Friday afternoon or first thing Monday morning, but obviously the markets want to see it right now. And also, obviously, the contagion now is spreading.
Yeah, I mean, the markets are being fairly impatient.
Yes.
You know, we know that, we believe that this bailout package is going to happen eventually, but it's obviously not quick enough.
Yeah, I mean, I think everyone accepts that by May the 19th, the package will be there, so they'll be able to refinance the €8.5 billion, which needs to be due then. But the problem is that between how do we get there? And the markets are moving very quickly. They know that there's this huge feedback loop from what we're seeing in the government world into banks once again, not just the Greek banking sector, but potentially a lot of other banks around the Eurosystem, and that is of huge concern to policymakers.
Yeah, talk to me a little bit more about banks and exactly what's going on between the bond markets and the banks and the danger that there is for banks.
Well, with Greece itself, we began to see in December, January and February of this year a classic bank run with domestic deposits actually falling very sharply. And that's presumably continued into March, April. We know that a lot of banks around the Eurosystem have huge exposure to Greek paper. Yeah. So if Greece, for example, at this point defaults, then that's a big problem for many banks, which could then feed back into the wider real economy and obviously cause the Eurosystem, which is at the moment struggling out of recession, to go back into it.
So would that be a scenario where banks were actually coming to governments again asking for more bailouts?
Absolutely, which obviously no government wants to see happen. So I think I'm very clear on this. I mean, I think they'll basically get the finance by May the 19th. I think at the moment Greece is simply too big to fail, so they'll do whatever they can to continue how things are. But next year may be a different story. By then, if the Eurozone is stronger, Greece could then default. I mean,
Right. Yeah. Well, how big a responsibility has Germany got in this? I mean, Germany's prevarication, presumably, is what is preventing the markets from having a clearer knowledge of when the bailout's going to happen.
Absolutely, but if you're Germany and handing over cash, you want to see conditions attached to it. We know that Greece not only has a huge budget deficit at the moment and a huge level of government debt to GDP, but the ECB was warning that they've got a huge demographic time bomb by, let's put this on the table, 2050, the ECB was warning last January. The government debt-to-GDP ratio in Greece could go to 550%. Right. So it's not just a case we're going to give you the monies now. We want to see major reforms, structural reforms, not just your labour markets, your product markets, also to pensions. And obviously the IMF is not going to give the money lightly either. They want to see conditions attached to this. Yeah.
Now let's look at contagion, because for a while we were being told that wasn't happening. Now it appears with what's happening in Portugal, it's beginning to spread. Is this the beginning of something bigger?
Well, it could well be. We simply don't know where this is going to end, really. It's worrying also for other sovereigns outside the Eurosystem itself. Right. So, they have to perhaps think about doing more radical measures. I mean, up until now, the ECB has just basically been helping the banking sector by providing liquidity on demand. Maybe now they think about quantitative easing. Maybe they have to start buying government bonds, and that be maybe the next step.
Now, when you say outside the Euro system itself, are you thinking of the UK?
Think of the UK, but even the US, which also has a very large budget deficit. But particularly with the UK, we've got the general election, of course, coming up next Thursday. We've got a whole issue that we won't necessarily know the result until Friday, and then there's a whole issue about the coalition itself. How long does that take to actually form? I'm actually quite relaxed about policy in a home parliament scenario to some degree. What does concern me is the way the markets are moving at the moment. Would they give the coalition a chance?
Indeed, and the fact that you've got credit rating agencies in the mood for downgrades. Yes. Do you think that makes it more likely that the AAA rating might be under threat?
I don't think the AAA rating in the UK is under threat at the moment, but certainly the markets would move ahead of that. So it's not like Portugal or these other countries like Greece. UK is not in that space, but obviously would the markets give a coalition in the UK a chance? I mean, that's the key thing at the moment.
OK, well, we shall wait and see. David Owen, thank you very much for joining us.